standing by to take us through the week we just finished. Of course, it's a bit of a topsy-turvy. We fell down on the index to 11% since the year started. We are now one of the worst performing stock markets in Africa. Again, as we see a major sell-off in frontier markets and emerging markets around the world. We're not facing any currency crisis yet, but investors are selling down on their positions. We lost about 2% plus last week, the lower end of 34,000. Temple, take it away from here. It's nice to have you back on the block.
Nice to hear your voice and to see you too, Bosun. Thank you so much. Just like a lot of African countries, Nigerian market also fell by over 2% last week. We saw the same thing in the Kenyan market. We saw that was over 2% decline as well in Johannesburg Stock Exchange, as well as the BRVM community where you have the Francophone trading shares there. It was only the Egyptian market that was flat last week. It explains the kind of emerging market sell-offs that you talked about earlier, boss. And so digging deep now, yes, we were down 2.33% to 34,037 points. And that's not far from the fact that all of this stemmed from the sell-offs we saw across bellwether stocks, including the likes of Seplat, which ended up dragging its sector the most by over 3% last week. There was also decline in Nigerian breweries, Access Bank, Guarantee Trust Bank, as well as UBA and even Zenith Bank. All of these ended up outweighing the kind of losses that we saw in the banking index last week. Insurance sector was down by some 0.06%. Consumer goods sector down by 2.75% as we continue to, as Nigerian breweries specifically, that lost some 5.11% week on week, impacted that sector heavily. Seplat was about the worst performing of the oil and gas sector, as it dipped by some 7.23%, and then leading the oil and gas sector to 3.68%. Industrial goods also fell by 1.86%. And for the US side, that's the unlisted securities market, you've got a 712.76 points in terms of the US side, the index for that market. That was up by 2.83%. We see investors taking position in a couple of stocks, talking about the likes of CSCS, Friesland Campina Wamco, where 128,226 units of that security was traded last week. For CSCS, it was 609,950 units of shares that was traded on that side of it. And all of these ended up impacting the market, where we ended up seeing 890,636 units of shares traded for a value of 36.94 million naira. Talking about the fixed income market, we got the bond side of things. Activities in the bond market was bearish due to the slightly higher stop rates as the open market operations auction, as well as sustained sell-offs from foreign investors on the back of continued sell-offs, continued turmoil now in the emerging market assets, as we talked about earlier. As a result, we ended up having the yields rising 27 basis points week on week to close at 15.07%. And yields expanded across the short side of the curve by 49 basis points, with the medium side of the curve was 12 basis points. And for the long end of the curve, it was up by 21 basis points. This also follows sell-offs that we've seen in the July 2021, which was up by 109 basis points last week. And then February 2028, up 20 basis points. And March 2036, rose by 26 basis points. But for the numbers on the screen, you've got all of this sentiment that we explained now reflecting in some of them. You've got the 23rd of February 2028 coming in at 93 naira 85 kobo after 4 deals was exchanged on that for a value of 2.20 billion naira. And on Friday, we had just 45 deals for a total value of 14.20 billion naira. We're seeing yields, continuing to experience this kind of upward trend we've seen as market players maintain their relatively risk-off stance in tune with the recent developments that we've seen in the short-term interest rates. But for the Treasury bill side of things, you've got the strong liquidity-driven demand up until Thursday's OMO auction, where the CBN raised the stop rates on the longest tenured bill. That's the 182-day to maturity bill now on offer by 35 basis points to 12.50% from 12.15% previously. There was also reversal in bullish sentiment, leading rates to close at 12.36%, 15 basis points week-on-week expansion. Sell pressure was concentrated at the short end of the curve by 52 basis points. We saw it rising amid sell-offs of 48-day to maturities and the likes, basically, which ended up coming in at 124 basis points. Well, you've got yields contracting at the mid side of things by 3 basis points. You got the long side of the curve down by 30 basis points. And this is driven by demands on the 139-day to maturity papers, which declined by 10 basis points, and the 314-day to maturity bills that declined by just 75 basis points. You had the November 2018, two of that actually, the 29th of November and 8th of November, as well as 25th of October 2018, dominating the transactions that we saw at the FMDQ, which is the secondary market, on Friday. And at the end of the day, we had 1,044 deals for just a total value of 276.35 billion naira. In summary, you've got 1,089,000 deals in terms of bonds and T-bills now, for a total of 290 billion naira. But this morning, we woke up to the news of the Q4 T-bills auctions calendar that was released by the DMO, and investors see the DMO now rolling over the 1.02 trillion naira budget financing program that we had in the past 2 quarters for the 4th quarter of the year. It means that this is what investors will be factoring into their considerations or their plans for this week going forward. Back to you now, Bosun.
Temple, thank you very much. Stick around. We'll be back to you. We have a bit more to talk about the markets when we come back from the break. You're watching Business Morning.